ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
All right. We'll bring it down to a manageable level of noise. Okay. Before we get started, this is maple swirl. Let's see. It doesn't really smell mapley, not the way like maple syrup would smell, but maple swirl. Maple swirl. Maple swirl. I can't figure out what flavor it is. I mean, if someone didn't say it was maple swirl, I'd have no clue. I have no freaking clue what that was. All right, give me 2 seconds. I'm going to make sure I actually had maple swirl. I don't think that was maple swirl. I think it was some kind of vanilla. Anyway, maybe that's just a thing where I have to know what I'm eating. Anyway, who knows? All right. So, a couple of things. We're going to talk about weak US dollar. We're going to talk about whether or not XRP should be considered in a digital asset stockpile and whether it has any real utility. Now, this isn't just a strictly XRP conversation. This is also a Cardano conversation because there's probably not much utility in Cardano either. And whether they belong in a stockpile is probably a good question, but we'll use the discussion about XRP as a pretext because there's a lot of other weird stuff about XRP that a lot of people don't know because they just put the blinders on. They say the great reset's coming. Trust me, the reset's coming, and they put the blinders on, and then the token, gets purchased by investors waiting for the Great Reset and sold by the company. All they do is sell the token. So it's something we need to talk about. Is there another coin that has the same function as XRP? Yes. Any other stable coin on the planet. If you have stable coins, then you don't need to take dollars and turn them into XRP and turn them back into dollars when you can just turn them into dollars. One time. Just dollars. If you want to shoot crypto dollars around, then just take a stable coin and send it. A stable coin that's worth $1. You can't have a floating rate asset carry and hold value any more than a few milliseconds. Things change. So anyway, we'll talk about it. And then we're going to talk about, okay, you guys probably aware there was a trader on Hyperliquid that took a 40x long position. And that was, for a long time, people were thinking, well, this guy's crazy. This guy's nuts. This guy's insane. A long time, 3 days. He had nuked the pool a few days back last week, and he hit them for $4.5 million because he let his account be forcefully liquidated, which he didn't care because he actually ended up winning on the trade. But then he took short positions both in Ethereum and Bitcoin. He closed his short Ethereum position, which was a 25x, but he held his Bitcoin long position, and I guess he got out yesterday for about $8 million in profit. And so there's all sorts of speculation. Is this another exchange taking shots at Hyperliquid? Is this advertising for Hyperliquid? Whatever. To me, it's advertising that Hyperliquid is, one, it's a platform that's dangerous because they extend leverage and make you think it's safe. It's not safe. Their community fund already got pilfered almost to zero. So already I'm a little bit dubious. A bunch of people that put together a platform, a lending platform, and don't understand basic math. That's always a little bit uncomfortable to me. Then I would say, and we're going to talk about it more, but now this whole idea that they're democratizing crypto whale hunting. Like, come on, all of you guys, all of you people with $18, let's go and take out that one big trade. How dare that guy be successful, or girl? Could be a girl. How dare he or she be successful? So let's all get together and fuck that dude over. And there's a lot of problems with that. So we're going to talk about the optics of it. Then we're going to we're going to get a little bit into the nitty gritty of it. And then if you have questions, do like Chris did, put a little Q equals question. And there we go. Let's see. Over the past few years, Garlinghouse has been pushing XRP as a stablecoin at the WD, but that wouldn't even make sense. Ripple has a stablecoin they just minted, RLUSD, which doesn't. Okay, you have another stablecoin. Okay, great, another stablecoin, another to add to the 40 that exist. But I don't know beyond that they have anything to offer, but we'll cover it. Let's talk about weak US dollar first. But yeah, the Great Reset. The Great Reset is coming. Okay. First things first, let's talk weak dollar. So right now, a lot of people are like, who's going to pay all the tariffs, the Trump tariffs? What the hell's going on? Okay, so when the dollar is weaker, apparently, the contention is that it makes it a little bit more murky who actually bears the cost of these tariffs. So the US dollar has dropped about 1.7% in a month, which seems to complicate Trump's tariff strategy. Remember, if the US dollar is worth less, it means we can buy less foreign goods for the same dollar. Does that make sense? So a strong currency means you can buy more foreign stuff at a relatively cheaper rate. A lower currency versus other countries or trading partners means you can get less of their stuff, but they can buy more of your stuff. So it means you're more export driven. There are a lot of reasons for and against having a strong currency, but as far as trading goes, a strong currency typically makes it very difficult to be export driven. That means it's tough on GDP. It's tough on U.S. companies selling abroad. Okay, you can kind of think of it that way. So Treasury Secretary Scott Bessent argues that other countries should bear the tariff costs, but the dollar's fall seems to contradict this. And we'll go into it a little bit. But right now, consumer confidence is low. Jobs look bad. Hiring looks bad. The tariff stuff is just, people are kind of back and forth. They're on the fence. You know, I'm not sure the tariff stuff is anything more than just renegotiating a bunch of bad deals that the U.S. has been stuck with for decades. It's time. I know Biden and any of the blue ones didn't have the cojones to go and fight. Trump does have those cojones, but sometimes he gets ahead of himself. So, you know, here we are. Anyway, tariffs are starting to weigh heavily on U.S. businesses and consumers. The retail sales numbers came out yesterday, not good. So January was revised down. February was tiny. There was no big rebound. There just wasn't. So people are not spending because they are, I mean, I guess we can't say job insecure. Well, I mean, there's a lot of people that are job insecure, but they're insecure about being job insecure. I guess is the way we're supposed to say it. There's a lot of people that are worried that they can't get jobs. There's a lot of new entrants into the job market that can't get jobs. That's not a good environment. So the macro is yucky, and you still have the Fed and a few other people lying about it. Everywhere else in the world, these central bankers are just saying, yeah, look, things suck. We're going to make changes. We're cutting rates. Okay, but here, where we are, with the Fed, which is not a central bank that pretends to be a central bank, and all the people that believe that it is and believe that what they do matters, well, it creates a weird narrative. We have a weird kind of existence, right? So U.S. dollar is slowly sinking, which makes Trump's tariff strategy kind of messy. Investors aren't feeling good about where the economy is headed. They're essentially dumping their dollar, which again, this is a vague 10,000-foot view, but that's not great news for political support behind the tariff battle, because tariffs are supposed to make currency stronger, but what's happening is the dollar is going the opposite way of what, you know, a bunch of, again, economists that were trained in the 60s had said. And it's funny because Trump had said Trump was kind of right before all of it. Anyway, it's kind of funny. Anyway, tariffs have hit, but the dollar isn't moving the way that all these economists had expected. So Treasury Secretary Scott Bessent has been out defending the tariffs, saying that weaker foreign currencies mean other countries bear the cost or financial burden of these tariffs. So that's his argument. It's that a strong dollar would make imports cheaper, right? Because you get more stuff. So it's not Americans who are paying, is the contention, right? Like if we have a strong dollar, we get more stuff. Even if we put tariffs on it, tariffs on the way in, still wouldn't matter. We get more stuff. Okay. Problem is the dollar's not strong. So that argument doesn't work. The Bloomberg Dollar Spot Index, which tracks U.S. dollar against major currencies, down 1.7% in 1 month. Against the Swedish kroner, down more than 5%. And that's not what's supposed to happen when tariffs are raised A weaker dollar does the opposite of what Besson is claiming, because it pushes up import prices even more, because you're getting less of those things. And if those things are more expensive, you're getting less of those expensive things. China's manufacturers will eat the tariffs. This is what Besson has said. He said this on NBC's Meet the Press. He said, I believe the currency adjusts. Okay, cool. But the numbers are not backing that up. The Chinese renminbi hasn't moved much at all, down just 1.5% since Trump's last round of tariffs, barely a dent. So it's kind of paced the U.S. dollar. U.S. dollar's down a little bit more, but it's kind of stayed on pace. So nothing much has changed as far as China is concerned. Other currencies like the Mexican peso, the Canadian dollar, they have dropped even more, but they haven't weakened enough to match the 25% tariffs imposed. So just think about it. If everything goes up, and again, it's not but if everything goes up 25%, your dollar to be dead nuts even has to be up enough to cover the spread. So the numbers are not adding up. If foreign currencies aren't weakening as much as expected and the dollar is not gaining, those are relative, right? Inversely proportionate. Then who exactly is paying for the tariffs? Well, right now it's the U.S. consumer, right? And Trump's team is still sending this idea that tariffs shift the tax burden onto foreign companies, but the consumer, the U.S. consumer, is not seeing that. They're not feeling that. Polls and consumer sentiment report growing skepticism, again, among the untrained, but fair. They're skeptical. People see higher prices. They don't believe China's picking up the tab. They also see higher prices because we're in the slowly dissolving tail end of a supply shock, and this is what Jeff Snyder calls the payback phase, right? So the next big tariff move is coming on April 2nd. Trump is rolling out his largest tariff expansion yet. This is the reciprocal tariff aimed to match the taxes, tariffs, and trade barriers that U.S. companies face overseas. This one I tend to agree with. But anyway, Trump's advisors have been pointing at foreign value-added taxes as the next target, expecting duties of 20 to 25% or more. But there's a big unknown, and that's, will the dollar react the way the White House and Besson expect? And based on on recent trends, probably not. And investors aren't convinced the plan will work. The stock market has sold off pretty precipitously. I think they said this is the biggest retracement in the stock market in the shortest amount of time since World War II, since the end of World War II. That's somewhat significant. So instead, markets see a slowing economy. They see a job market that sucks, and then the Trump tariffs on top of it. So, yeah, with 25 to 50% tariffs, we're in a very different situation. And with the dollar now, in fact, against most currencies, the math simply doesn't work, said Padraig Garvey, head of America's research at ING. His report noted that past tariff hikes boosted the dollar, but this time the opposite is happening. And the stock market has struggled, as you are probably well aware. The stock market has struggled as the uncertainty grows. And it's not uncertainty. When people are selling, they are certain. They're like, I want out. So there is certainty in their decision making. Wall Street's not loving Trump's tariff roller coaster. The S&P 500 fell into correction territory last week, down over 10% from its high. The NASDAQ dropped while the Dow Jones gained 302 points, helped by Walmart and IBM. When Walmart's doing good, you should be really worried. I'll just say that. Retail sales came in lower than expected, up just 0.2%, so 20 basis points in February, missing the 0.6% estimate. So it was a third of what they had estimated because, again, economists are idiots. Investors were relieved it wasn't worse, but the numbers weren't good either. The economy isn't collapsing, but it's not thriving. Well, that's a bit disingenuous. They also forgot to mention that they downward revised. It was negative 0.9, negative 0.9 in January. They downward revised it to negative 0.12. I mean, negative 1.2. Sorry. So like a 30% like downward revision. And then this for this month, it's 1/3 of what their bounce back was supposed to be. This is not good. American manufacturers have been complaining about the strong dollar hurting exports, and now with the dollar weakening, their products should be more competitive overseas, which is a good thing. But instead of helping, the uncertainty around tariffs is making things worse, it would seem, at least based on simply looking at the currency specifically. There's even a theory floating around that Trump is deliberately weakening the dollar, which, again, strong dollar. Remember that guy used to say that strong dollar is stupid. Strong dollar means you can't export. And you can't be an import driven. If you import everything, you eventually disappear. You collapse under your own weight. You have to export something. And that's why you want some balance in what's going in and what's coming out. Anyway, economic advisor Steve Moran once pitched a Mar-a-Lago Accord to drive the dollar lower, making U.S. goods more attractive abroad. So whether that's actually happening or not, at least the stock market doesn't seem to care. They're just like, life sucks. So that's where we are. That's kind of the macro picture. And it's important to keep those things in mind as I sip this delicious coffee. For a flavor that I'm not even sure what it is. Let's see. A $900 billion deficit. Oh, I'm sure it was more than that. Anyway. Okay. So let's talk XRP. It always gets me when I think about these guys and the scams they've pulled and the crap they've gotten away with, and how many people, like ostensibly smart people, are completely fleeced and gloss-eyed by these idiots over it. And I don't know who the bigger idiots are. I mean, I guess they're not the idiots. The idiots are the morons that keep buying this token, waiting for the great reset. But I guess it's like, what was it? Is it Heaven's Gate? Were those the ones that were in San Diego waiting for the alien ship to come get their bodies, but they couldn't leave. Their physical bodies were too heavy, so they had to transcend. The only way to do that was to basically Jim Jones it with a Kool-Aid. You guys remember that? This seems a lot like that. Anyway, so let's talk XRP. So is there a role for XRP in the U.S. digital asset stockpile? Well, it has raised a lot of questions about the token's actual utility and, I mean, whether it needs to be there in the first place. And also, use, utility, and wide-scale adoption. That's when we look at things, we say, after we've assessed it doing the 5 T's, we say, can this thing achieve use, utility, wide-scale adoption? Will there be any hoarding effect? And what would dummies do? Well, we know what dummies would do. Dummies fill up the back of the truck with XRP, and they apparently don't sell. No one sells. They're waiting for $589 a token or something so ridiculous as to, like, if you go down that thought path, it just makes your brain explode. Anyway, crypto advocates seem to split hairs on whether XRP deserve to be in the digital asset stockpile, which again, right now it is not. There is no XRP, there is no Cardano, there is no Ethereum, there is no, only Bitcoin. Only Bitcoin. But in the future, does XRP and Cardano deserve to be in the digital asset stockpile? And so this gets a bunch of people to question the actual utility. Someone had posted on the SEC website this idea that the SEC should start using XRP for settlement. And everybody's like, whoa, that's something anybody can post on the XRP website, man. Anybody. And it was really bad. There was like tons of grammatical errors and logic errors. Like the person that did it was not good at math, even like really basic math. So it made the XRP community look kind of stupid. Anyway, XRP still currently the third largest cryptocurrency by market cap. It gained recognition after the weird Trump message about XRP, Solana, and Cardano as part of a strategic crypto reserve, which seemed pretty weird at the time, but it pumped all those coins a couple weeks ago, pumped everything. We probably should have all sold knowing how stupid and bull crap it was, but whatever. Anyway, Trump's executive order on March 6th established a new structure for such altcoins, which is the digital asset stockpile, but it's managed by the Treasury. There's a lot of caveats, there's a lot of hoops, there's a lot of hurdles, and that's all got to go through the legislators. It's not just like something that he can open up the table to discussion. He can't make the government buy stuff. So anyway, the crypto community is and should be pretty divided on whether XRP is as valuable as the simple Trump message suggests, or again, that message was pushed by his kids. He doesn't control that account personally. But anyway, so it makes sense let's take a close look at its utility. Launched in 2021 by Ripple Labs, the XRP ledger. This is XRPL. XRPL was designed for interbank settlement. It initially offered 3 enterprise solutions: XRapid, XCurrent, and XVia. All were later rebranded under the RippleNet umbrella. XCurrent is a real-time messaging and settlement system between banks. You might be thinking, oh, that's how that old system, the Swift network, like messaging, money messaging. Yes. So XVia, another product, is a payment interface allowing financial institutions to send payments through RippleNet, which, I mean, that should be all part of the same thing. It's not really a separate product. That's the UI. And now XRapid, right? And this is all part of on-demand liquidity, ODL, which facilitates cross-border transactions. You can actually go and look at their on-demand liquidity and see how many transactions are occurring, and it's nothing. It's just nothing. Of all those products, I want to have an interesting pop quiz. Of all those products I mentioned, guess how many of them require XRP? Guess how many? So we have XCurrent, XRapid, XVia, and ODL, on-demand liquidity. Of all of those 4 products, how many? No, not 0. Only 1. Only the on-demand liquidity part. Just one. Come on, give them a 1 out of 4. Give them a 1 out of 4. It's 25%. They still don't pass. Anyway, yeah, on-demand liquidity is the only thing that requires XRP. The other services allow banks to use RippleNet without ever holding the token. This means that Ripple, the company that sells XRP, hundreds of millions a month to finance their business, on a bunch of investors that believe the Great Reset is coming. Even if the Great Reset does come and the whole world starts using Ripple technology, they don't have to hold the token. None. Not a single token. Nothing that they do, XCurrent, XVia, or XRapid, which is the whole point of RippleNet, they don't need XRP. The only part that needs XRP is on-demand liquidity, which is kind of problematic because that's not the way they've been pitching this. Some of the world's largest banks have tested and used XCurrent and XVia, including American Express, Santander, Bank of America, and UBS. But they don't continue to use it. That's the problem. They tested and they're like, no thanks, man. There's less data, of course, on entities that use the XRP-powered ODL service, and there's almost not enough. Like, look, there's nothing going through that thing. It's dead. It's like if it was grandma's EKG, she'd be dead and buried. Known adopters include SBI, Remit, which is a Japanese remittance provider, but also a huge investor in Ripple, and Tranglo, a leading remittance company in Southeast Asia, which I believe XRP owns a percentage of. What's funny is they're not really talking about the MoneyGram deal, which was that Ripple invested in MoneyGram to use XRP And MoneyGram still chose not to use it, which should send off tons of red flags. But in the community, they're like, no, they're keeping it secret. They're keeping it secret for the Great Reset because they're going to take the token and make it 10,000 a token so that the rest of us are rich. We're going to inherit. Oh my God, you guys have taken this meek shall inherit the earth shit way too far. Anyway, what is XRP's role in Web3? XRP is also used as a gas token. However, unlike the Ethereum network where fees go to validators, a small amount of XRP is burned as an anti-spam mechanism. XRP's role in Web3 is pretty minimal. Unlike Ethereum, which is kind of everywhere, Ripple does not support complex smart contracts. It doesn't support dApps. It offers only very basic Web3 functionality like token issuance mechanism and native NFT support under this XLS 20 standard introduced in 2022. The XRPL Web3 ecosystem is also incredibly small. It has a very tiny DeFi sector, holds 80 million in total value locked. Think about that for a second. Their whole DeFi sector holds 80 million bucks. The people here listening, just us, have 80 million bucks. Just us together. So I don't know, man. According to DeFi Llama, XRPL's tokens, that means all their random tokens that people do or don't sell, have a combined market cap of 468 million. According to XRPL.to, most of them are DEX tokens, Solo, and memes, XRPM, as well as wrapped Bitcoin and stablecoins. So, nothing. So their Web3 remains pretty niche, doesn't have legitimate smart contracts, can't do much of anything, and no one really trusts it. So, and then you have the arguments, and again, people get very religious, more religious about this than religion. But crypto pundits tend to get very edgy when you talk Ripple and XRP. And full disclaimer, I made a ton of money on Ripple. It used to be called Ripple, and then it turned to XRP. Matter of fact, I even remember, I think on some exchanges, I'm thinking back to the Poloniex days. If any of you guys remember back 2016, 2015, 2014, I think it was on some exchanges, it was RPL or RPPL. It was something like that. They were called Ripples. And then they rebranded XRP, and also Lumens rebranded Stellar Lumens, which was I think it was STR branded to XLM. Anyway, there's reasons behind that, obviously, too. So Ripple Labs representatives have been advocating for equal treatment of cryptocurrencies, with Brad Garlinghouse reiterating, this was just at the end of January, "We live in a multi-chain world, and I've advocated for a level playing field instead of a one token versus another universe. If a government digital asset reserve is created, I believe it should be representative of the industry, not just one token, whether it be Bitcoin, XRP, or anything else." Well, Brad, it was never going to be XRP. It was never going to be anything else other than Bitcoin. So when he makes a statement like that, comparing XRP to Bitcoin is so flawed, self-absorbed, with so much hubris, we don't even need to get into it. You just suffice it to say Brad Garlinghouse is an arrogant piece of shit. Oh, by the way, he's an arrogant piece of shit that stole $1.3 billion from every one of you who bought the token. Period. I was already on my way out when this asshole started selling. I'm cool. He didn't. I wasn't part of his exit. Anyway, not all cryptocurrencies serve the same purpose. Bitcoin's primary role is to be a geopolitically neutral asset, like gold, right? In the words of Willy Woo, he said, "Geopolitically neutral, like gold." Okay, Willy. Damn. Now, I don't agree with everything Willy Woo says, but he has a cool name. It's fun to say it. XRP's purpose is less clear. I don't know that anyone, no one is arguing that XRP qualifies as an independent money. It's not a store of value. There's not many ways by which you could measure it to be. I mean, the only way you could say it's money is that, yes, I'm sure you could use it to extinguish debt to somebody else. So in that sense, it's money. It's certainly not currency. Anyway, and this is due to one of Ripple's most uncomfortable aspects, and that is it's permissioned. It's a permissioned system. So unlike Bitcoin and Ethereum, Ripple doesn't rely on miners or stakers or staked tokens or stake pool operators to secure the network. It uses this unique node list, UNL, that's what it's called, a unique node list, which is a group of trusted validators, which 20% is Ripple, the company itself, responsible for approving transactions. While this makes it very fast, right? Very, very fast, very efficient. There should be concerns about censorship, corruption, and security risks. I mean, there's already been corruption. There's missing blocks, so there's censorship. And the security risks, I don't know. I don't think they've been pilfered. So I think so far that hasn't been exploited. But they have been found corrupt, and they have been found to censor transactions. So 2 out of 3 on the naughty list. They got it. Bitcoin proponent and co-founder of Casa, James Loop, didn't hold back discussing XRP's potential. He said, there's Bitcoin, then there's crypto, then there's Ripple. Ripple has attacked Bitcoin at every level, rivaled only by BSV. Remember that guy, Craig Wright, that douchebag that's been found in every court in the land to be a complete fraud? Anyway, Ripple explicitly wants to power CBDCs, central bank digital currencies. That one thing, by the way, that all the politicians are saying, no way. Even they get it. Even these aged out old fools, they get it. It's so funny. They've always been they have always been focused on servicing banks. Few projects are as antithetical to Bitcoin as Ripple. So Ripple co-founder Chris Larsen partnered with Greenpeace to fund an anti-Bitcoin campaign. You remember that? You guys remember this, right? Chris Larsen gave money, lots of money, by the way, that he sold by selling XRP to dummy investors, then supported Greenpeace funding a bunch of bullshit anti-Bitcoin propaganda about global warming. No shit. I mean, you can't make this stuff up. But this is the same guy, by the way, that backed Harris to the tune of like $26 million. And then, oh, no. But Brad said he liked Trump. Oh, okay. Got it. So all that money you guys threw at that campaign at the Democrats, that didn't count now, but now everybody's cool. Okay, got it. So Loop compares CBDCs. He says the comparison to CBDCs does hold some weight given that XRPL's permission nature, which is what a CBDC would be, is a permission stablecoin. It reflects a common view in the crypto community that XRP functions more like a banking tool than an independent cryptocurrency. Begs the question, why is there even a currency, bro? So you say, well, does XRP actually need to exist, the currency? And the answer is, other than to enrich those people that own XRP from the beginning, Brad, Chris, the douchebaggery, other than to enrich them, no. While the XRP blockchain sees widespread testing in banks, XRP's utility remains a point of concern. It underscores the fact that 55% of the 100 billion pre-mined coins are mostly still held by Ripple Labs or executives. So does that seem safe? The idea that they control their nodes, they control block production, they control censorship, they control the float. Oh, and they have almost 60% of all the currency. Certainly there would never be any risk of market manipulation. So I don't know, man. Anyway, that's you tell me. And some of you may think it does belong in the stockpile. Do you guys think, I'll open it up. Do you think that Solana, XRP, and Cardano belong in the stockpile? And if so, which ones belong? And if none of them belong, just put no. What say you? What say you, good humans? Oh yeah, I don't know. Yeah, the rich reset. I don't know, Robert. I think the number's like, oh well, if you have 1,000 and they go to 10,000, you have 10 million bucks, right? So everybody gets 1,000 XRP, and when XRP hits 10,000, we're all 10 millionaires. Yeah, 10 millionaires. Yeah, what the shit? Say no, not no, 3x, no. Doge belongs there. Yeah, I mean, if ADA belongs, yeah. Well, think, Barry, I own ADA too, but it doesn't belong in there. Like, you got to call a spade, man. They're just junk. They're junk. Okay, Robert, you got yeah. So, Robert, let's me and you get 1,000 XRP, and then we'll be rich when everybody else is poor because the Great Reset. They're not going to see it coming. It's going to happen on a Sunday morning at like 2 a.m. Oh shit, I've said too much. They're going to get me now. Okay, let's switch gears a little bit. Has anybody been following what's going on with Hyperliquid? Was anybody watching the trade yesterday to see this guy's trade opened up? Pretty cool stuff. I enjoyed it. It was Brandon kept sending me little bits. It was like a good pastime. It was a lot of fun. And so now let me go into a little detail about what's going on at Hyperliquid. I'm not comfortable with what's going on over there. There's a lot of reasons I'm suspicious about what's going on over there. Let's switch up this music. Let's get a little different. Let's get a little different tune. How about intrigue? Yeah, I think intrigue makes better sense. Okay. So for those of you that don't know, I'll go through it. But Hyperliquid has opened the doors to this idea of democratized crypto whale hunting. Now, before we start, do you guys understand what crypto whale hunting is? Does that make sense to you guys? You can just say the word. You can say the words, and it starts to make sense. Crypto whale hunting. So, at first, when I was watching this guy trade, inherently he's shorting Bitcoin when Bitcoin is already really low, which I think is stupid. I mean, I think it's tactically very stupid. And also, at various points in the trade, he'd been up 5, 6, 7 million. And I thought, why doesn't this trader just cash out? Like, you won. He's 40x short. It's a lot of leverage, short on Bitcoin. So take the win. And then I thought, well, is this guy, is it another exchange taking shots at Hyperliquid, trying to bring them down, force a liquidation? Is it like, I don't, is it just some parlor trick advertising for Hyperliquid? Like what's the story here, right? Let's see. Can you explain why the liquidation affects so much the liquidity pool? If liquidated Hyperliquid gets ETH, well, yeah, because a liquidation, remember, you take on leverage, they're taking the other side of the bet. So if they're on the other side, they're holding the bag if you screw up. And you get liquidated and the price deteriorates quickly, you get punished on the other side. It's like you both get punished. He got liquidated out of his position, but you're the one holding the bag, having to unsettle and unwind all that leverage. Does that make sense? So remember, when you're taking on a bunch of leverage, if I'm putting up for 40x leverage, I put up 1 Bitcoin, you put up 40. 2, 80, 3, 120. You see where I'm going? You see where I'm going with this? 40x. So if he puts on $1 million position, you're on the hook for 40 million. If he puts on a $2 million position, you're on the hook for $80 million. And when the market starts to unwind, you don't know where you can get out. You don't on the other side of the liquidation have any guaranteed exit. You're liquidating at the price the market is. So you can sustain some pretty substantial losses. That's why they lowered the exposure people could get on these assets down from, it was 50x. They got nuked. Now they're down to 40x. Anyway, yeah. So here we go. So there is an apparent joint community effort that was kind of waged yesterday to liquidate this Bitcoin short seller. Like, how dare you? When I thought about this, it made me really, really angry. It smells a lot like Wall Street bets. It smells a lot like a bunch of dumb assholes that are late to the party, pissed off that someone else is successful. And so what? Hyperliquid's going to rally everyone together. Let's get this guy. To which I say to Hyperliquid, fuck you. An apparent joint committee effort to liquidate, and think about that for a second. You take a position, and Hyperliquid, the platform, rallies a bunch of troops to melt your position, to basically bankrupt you. Man, oh, this shit grinds my gears. Anyway, and this could become part of an emerging trend. Crypto whale tracking on the Hyperliquid blockchain has enabled traders to target whales with prominent leverage positions in a democratized attempt to liquidate them, according to the head of 10x Research. Hyperliquid, a blockchain network specialized in trading, allows traders to publicly observe what type of positions a whale is holding. And since these positions are leveraged, the market can access the liquidation levels unless additional margin is added. So this kind of thing really makes me mad. This kind of transparency opens the doors for coordinated attacks where a group of pissed off traders intentionally target stop levels in order to trigger liquidations. It's common belief in the crypto market that whales with substantial holdings can influence the market through their trading tactics, such as stop loss hunting, things like that, to deliberately trigger other traders' stop loss orders and liquidate their positions. Island says, that's the guy that they interviewed for this, that the recent actions from traders show this balance of power could be shifting into the mob. Now you're thinking, oh wait, shit, this is the same crap that happened with what's that company that's been losing money forever? They should be bankrupt, but someone gave them like $4 billion. Oh yeah, GameStop. And there's a lot of examples of these meme stonks and crap like that should not exist, because bad companies are supposed to go bankrupt, because that's the way that a good capitalist society actually works, rather than just saving certain ones because they have a sentimental value. But even though it's a terrible company, they lose money. Yes. They destroy shareholder value. Yes. But we want them to win. Why? Because I used to buy video games there when I was 6. Come on, man. Anyway, in effect, stop hunting is being democratized, with ad hoc groups now playing a role once reserved mainly for market-making desks or treasury teams at exchanges before tighter regulatory scrutiny. So when a bunch of regulators say you're not really supposed to be doing that, that's sketchy. So now it's cool that a bunch of people in a mob do it. So, I guess the idea is that transparency cuts both ways. And it's unclear if this will become widespread on chain, but it's a bad trend. And you would ask, well, why are traders trying to liquidate whales? So it's not the first time small traders have attempted to take down larger entities through coordinated attacks. The GameStop gamma squeeze, which they call a short squeeze, but we all know it was a gamma squeeze because it was on the option side. And it saw a bunch of small idiot traders flip the table on Wall Street short sellers because they were naked short. That's the difference. If they had not been naked short, this wouldn't have gone down this way. But anyway, they bought a bunch of shitty GameStop stock, sending it to all-time highs in order to liquidate these guys. So it's like, we'll show you. Like, what did you show them? You supported a terrible company that's going to continue to destroy value. And 3 people got rich and the rest of you got smoked. Bunch of idiots. That's why they called the movie Dumb Money. and appropriately so. So this is kind of like that. And when stop levels get triggered, prices can accelerate in that direction, providing liquidity for others to cover. So we've seen similar tactics from market makers and exchanges in the crypto space over the years. Anyway, 2 days ago, a crypto whale known for placing really large, highly leveraged positions on Hyperliquid opened a 40x position at $84,000 for over 4,442 Bitcoin, worth over 368 million. And he faced liquidation if the Bitcoin price passed 85,592. So let's call it 85.6. It was less than 1,000 away. And so basically, this a pseudonymous trader known as CBB sent out the call on X to gather a team of traders with enough funds to liquidate the whale's position. And at this point, I got pissed off. They even called on Justin's son. Justin, jump in, please. So this guy, a CBB, if you're willing to hunt this dude with size, drop a DM. Setting up a team right now and already got good size. What a bunch of fucking scumbags. So when I read this yesterday, I was white knuckled. I was like, fuck these dudes. I hope this dude takes them to the fucking cleaners. And at least he did somewhat. He exited, I think 8 million in the plus. And when he heard that, Bitcoin, when these little messages went out, Bitcoin went up by 2.5%, partly because there were coordinated efforts to liquidate a whale short position via Hyperliquid. So what did the whale do? Because he's got real money, he said, you guys are a bunch of fucking pussies. And he increased the position to 524 million. So the way this guy says fuck you is with a bunch more Bitcoin. And the whale hunters, they were about $1,000 away. But, and then this guy got on there. Oh, it's almost there. It's almost at liquidation. Only 1.7% away. And then things turned around. And this dude raped them. And I think he walked away last night with $8 million in his pocket. To which I say, bravo. Bravo, sir or ma'am. And I want to take a few. Okay, so before we go into this next bit, because I want to talk more about this. Do you guys understand now? You guys understand now what whale hunting is? You get this idea of everybody getting together and buying something for the wrong reasons to hurt somebody else, because it gives them some feeling of vindication, or they feel like, oh well, it's fair because this guy's got, or this entity has more than me. So it's fair. Hyperliquid is hyper. Yeah, this is what I'm talking about. These are the assholes that are out there telling everyone, "Hey man, come take this leverage. It's crazy. You can make so much money, man. Come make all this money." And then, behind the scenes, they're like, "Fuck this dude." That kind of two-faced bullshit is why I hope Hyperliquid gets melted. I hope their whole fucking thing gets liquidated. Man, these guys make me mad. Oh, see, you got a rant out of me. You got a rant out of me when there was no rant left. I had no rant left. And yet. Okay, so let's see. I put together my thoughts on this subject, but it's not coming up on my thing, so I have to do it on my phone. We're going old school, baby. Going to the phone. Anyway. So we're going to explore just for a few minutes. Wait. We got to go back to school. Since we got to go back to school, we got to play our cool school thing. Hold on.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right. Let's go. Maybe chill vibes. Marcus. Yeah. That's the one. You got to get the right vibe. Okay. So we're going to explore what I think is a troubling and increasingly common phenomenon in financial markets, which is this idea of whale hunting. So for everybody that's not, at least at this point, does everybody here, yes or no, real quick, you guys understand what whale hunting is at this point? Just a quick yes or no. Everybody here should now get it. So whale hunting refers to a coordinated action or attack by small investors, usually facilitated through social media like X or one of these other stupid ass platforms, aimed at targeting and financially attacking a large, successful investor or small group of investors, often called whales, with the explicit intention of causing financial harm. So to truly understand why whale hunting is problematic, you need to break down the topic into some key areas. Intellectual weakness, strategic dangers viewed through like game theoretically bad decision making, and then the broader social implications of this bullshit. So first, let's consider why whale hunting is intellectually weak. Effective investing and financial decision making are grounded in critical analysis, as fundamental as we can be. Diligent research, rational thinking, right? Rational thinking. Whale hunting, on the other hand, is built on emotional impulses such as envy and jealousy and greed. I deserve, entitlement. Instead of conducting detailed financial analysis and understanding market fundamentals, whale hunters rely on sensationalized, oversimplified narratives that appeal to very basic, weak intellectual emotions. And these narratives often ignore the economic realities and fundamentals and reduce very sophisticated financial concepts to these little bumper stickers and superficial storylines. Moreover, it fosters a herd mentality where independent thinking and rational analysis give way to groupthink, mob mentality, and this increases the risk of significant losses for participants. If you remember in the GameStop story, a very small group of people made money and everyone else lost. You know who made money? The douchebags on YouTube, the douchebags at Wall Street Bets, and the douchebags at GameStop. You know who lost? Fucking everyone. Everyone got melted except about 16 people. So yeah, let's do it. It's funny. What Internet Kitty, whatever his dumbass name is, that fucktard, he's not giving the money back, is he? He sure got everyone together to help him get rich. He's not redistributing it, is he? No. His fucking mouth is shut because he's rich now. Because he Brad Garlinghoused a bunch of people. He BG'd them. Bunch of idiots. Anyway, on the game theory side of it, whale hunting presents a bunch of really significant strategic dangers. In the realm of game theory, we distinguish between zero-sum, positive-sum, and negative-sum games. So, quick refresher, a zero-sum game implies one player's gain directly corresponds to another player's loss, right? I win, you lose, like an NFL game. I win, you lose, that's the way it's got to be. There ain't no ties, okay? A positive-sum game results in mutual benefits. A negative-sum game results in overall losses exceeding any short-term gains. Whale hunting clearly fits within the negative-sum game framework. So while attackers might achieve a temporary moment of satisfaction from inflicting financial losses on their targets, the broader market instability, loss of investor confidence, regulatory scrutiny that typically follows these attacks result in collective harm. So everybody, including all of the assholati, the Illuminati, the douches that do this social attack, the whale hunters, they end up collectively getting punished. But they're like, yeah, but we won. What do you mean you won? Your life is worse. Yeah, but remember when? No, I don't remember when. Because you guys are all fucking poor. Because of this kind of behavior. Because of this kind of mentality. Targeted attacks result in collective harm. It's a negative-sum game. In addition, targeting whales may respond by, adjusting their strategies to really stick it to you and retaliating through defensive mechanisms, creating a cycle of hostility and instability. Ultimately, all the participants, even the attackers, risk substantial harm. And when it's all said and done with, the whales are still whales. And you are now poorer because it is now a tougher environment. And guess what the whales do? They're like, oh, well, I'll go take leverage where you can't see it. And then I'll really stick it to you. You know what? This guy's got balls big enough to come in a dump truck. You know why? Because he did it in front of everyone. He could have done this on Binance quietly. He could have made the same trades. He could have taken 120x leverage. He did this in a public way. This was a big fuck you to all these people. And that's how you know this, because he doubled down when they all started whale hunting him. He was like, oh, really? Okay, cool. Mine's bigger than yours. So all you did is push that kind of behavior into murkier areas where people can't see it. Beyond the intellectual and strategic weakness, whale hunting carries pretty serious social implications. So economies and societies thrive on innovation. They thrive on ambition. They thrive on knowledgeable risk-taking, right? So these qualities are driven by incentives and rewards for success. That's the mechanism design of financial markets. Whale hunting undermines these incentives by creating an environment where successful individuals are targeted and punished for being successful. And this phenomenon fosters resentment and hostility towards success. It discourages talented individuals from pursuing ambitious projects or investments, or it discourages people from doing things out in the open because they might as well obscure shit and do it secretly. Otherwise, people on Twitter start coming after you because they're all fucking broke. So people start deciding, I'll just do things quietly and you'll never know what I'm doing, because they are in fear of becoming targets. So this results in the erosion of ambition and innovation, and it leads to economic stagnation. It leads to a reduction in information that the rest of us can get, reduced employment opportunities, diminished global competitiveness. Like, these things can spiral out of control, and it's not just the thing. It's this whole idea. It's just an extension of this narrative of I deserve, I'm due. You're not fucking due. None of us are due. All that we deserve is what we work for. That's what you deserve. And then maybe it works out for you. But none of us deserve anything. We don't deserve shit. Deserve is like fairness. It's a principle that doesn't exist in the vacuum of space. It's a made-up human construct. We deserve. You don't deserve shit. Additionally, whale hunting promotes a divisive social narrative where success is viewed suspiciously, and it undermines social cohesion and trust. So what are you supposed to tell kids? Hey, listen, if you work hard, if you come up with crazy and insane, innovative ideas, and it works, and you make a lot of money, a bunch of people are going to try to drag you down into the mud and stomp your neck because they're pissed off that it wasn't them, because they're due. And you took all their luck. You took all their success. There's no success left. To go a step further, regulatory and ethical issues start to arise from this idea of whale hunting. So market regulators worldwide are increasingly scrutinizing coordinated manipulative activities on both sides. Don't think that, I did it as a group, it's cool. There are DAOs that have been indicted. And if you're part of a DAO, DAO, Decentralized Autonomous Organization, and you participate in this bullshit, guess what? Every member of the DAO is in trouble. All of you. Market regulators are paying attention to this shit. And whale hunting could fall under such categories, potentially leading to serious legal repercussions for those involved. Those that are rallying on social media to attack someone, you better hope no one puts together who you really are. Because when you start targeting people that are successful, guess what successful people are successful at? They're successful at networking. They're successful at having a big fat Rolodex of people that can fuck your world. You think that little snake, that little wormy motherfucker that did Libre, the scammy Argentinian token, not the good project, the scammy Argentinian one. You think he's happy right now? This dude's in hiding. They're either going to kill him or they're going to send him to prison and then kill him. This guy doesn't live, right? You think he and these other scumbags are happy? They're getting indicted all over the place now. They all got red warrants out, Interpol warrants out from all of them. So then you could say, well, maybe even social media platforms themselves may face pressure to implicate stricter regulations, monitoring, more censorship, which could inadvertently limit free speech, online freedom, your ability to act and interact with other people. So, instead of engaging in and supporting whale hunting, because again, my first reaction was, I don't like this guy, Like, what is he thinking shorting Bitcoin when Bitcoin's already down? But then when I stepped back, I was like, no, wait a minute. He has every right. You can go long or short wherever you want. You have the right with your money to gamble and win it whatever way you see fit. I think that was pure gambling, but I'm glad he won. Because he deserved to win because he took the risk. Not a bunch of small-time assholes that got rallied because some douchebag on Twitter was like, yeah, let's go to Hyperliquid. Let's wreck this dude. And I guarantee you that if you could check this dude's wallets, the dude who started all this, he owns hype tokens, which is another thing. I don't even want to get into all that shit, but like that's another thing that's kind of sketch. Anyway, so instead of engaging in this kind of behavior, investors, large ones, small ones, medium-sized ones, should commit to making, informed decisions, prioritizing financial literacy and education, encouraging transparent, fair, and ethical investing practices. This is how you mitigate envy-driven attacks. And you nailed it. PD, you nailed it. It's an envy-driven attack. Envy-driven. Ugh, it even sounds bad. You don't want a shirt that says envy-driven. That ain't no kind of shirt you want to wear. Education systems should emphasize financial literacy. They should emphasize critical thinking, game theory, understanding of ethical considerations in finance. Try to foster a culture of genuine competitiveness and collaboration rather than hostile, envy-led anti-competition. So, I think at least you understand my perspective. Everybody can, we're all going to think about this in whatever way we're going to think about this. But to me, whale hunting is intellectually flawed, strategically hazardous, socially harmful, emotionally fucking weak. As participants and observers in financial markets, our efforts should focus on promoting fair play, informed decision-making, the free distribution of information so that everybody has an ability with the same information to make different decisions. Innovation-friendly environments, thought and analysis-friendly environments. This approach benefits everyone by building stronger, healthier markets, more cohesion, prosperous societies. Education is the way, I guess. That's the way to say it. That makes sense? So there's some food for thought. I know we ran over a little bit, but essentially, effective investing is grounded in rigorous analysis, rationality, and careful risk management. Okay? Whale hunting relies instead on emotional triggers, greed, jealousy, envy, sensationalism, and a feeling of being behind. I'm behind. I gotta catch up. You're not gonna catch up. Not that way. So, yeah, that's where we be. All right, we will be back tomorrow with Brandon, and we'll get back into the nitty gritty of it. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk, struggling on meth grandmother wouldn't do, or Brandon. It's probably cold there. It's nice and warm here. It's going to be close to 70 today, I think, and I'll be swimming. I'll definitely be swimming later today. I try to swim at least 2 or 3 days a week, but once it starts getting warm again, 7 days a week, baby. 7 days a week in that water. All right, we'll see you guys tomorrow.